Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Marty Mucci, Chairman and CEO of Nasdaq-listed Paychex, to discuss data from the latest Paychex IHS Markit Small Business Employment Watch, which is released monthly and focused exclusively on small businesses with fewer than 50 employees. The monthly report offers analysis of national employment and wage trends, as well as examines regional, state, metro, and industry sector activity. Marty, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. It's great to be here with you.
Overall, how did small businesses fare for the month?
Yeah, for the month of February, it was interesting. We were about flat job growth with January, but after 8 consecutive months of increasingly better job growth, we're still up about 8% more job growth than we had just a year ago.
What did the report say about wages on a national level, and what does it show about how employers are responding to the continued tight labor conditions?
Well, wages are really strong. We've still almost 5% wage growth. This is the strongest wage growth we've seen in many years. And in some regions like the South, it's actually over 5%. So hourly earnings growth has been up about 4.8% over last year. Very strong.
Are employers hiring more?
They really are. They're trying. You know, the biggest issue is the supply, of course. We still are about 3 million jobs less than pre-pandemic. So back to just 2 years ago in February of 20, and about 2/3 of that coming from leisure and hospitality. So still underemployed, and employers are trying to find those people, but it's tough to get them back, even with those wage increases that we've been seeing.
What sectors led the way?
Yeah, the sectors that led the way continue to be leisure and hospitality, though. So still up, about over 20%, 23% over last year from a job hiring perspective. Wages are up about 10 to 11%. So really strong hiring on leisure and hospitality. Construction that was the strongest for quite a while till the last, half year to 3/4 of a year, has really slowed down. I think supply has really hurt them. So while wages are up in construction itself, the jobs are down because I just don't think they can get the materials to supply for the demand.
Regionally, where did you see strength and weakness?
Yeah, regionally, we've seen the West be very strong now for almost a year, and the South continues to be growing as well. They're the strongest by far. Northeast, the weakest. You're seeing those southern cities, even in the West, you're picking up in that region, Texas and Arizona. When you're seeing those areas, and then you're talking about Georgia, North Carolina, Florida, they continue to be the strongest states. That's where most of the people are or are going to. They're able to find the people then to hire.
And finally, what about on the state and metro level? Are there any trends you can discern there?
Yeah, you're seeing on a state level, North Carolina, #1, and again, Georgia, those states in the South where the most people are either there or flocking to those states. That's where people are finding people to hire for these jobs. So it's making their job growth very strong. From a city-wise, Dallas continues to lead the way now for a few months. And again, I think it's because the population and the people are there to hire. So very strong job growth in those areas and wage growth as well.
All right, Marty, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.